Thank you. Good morning, everyone, and welcome to this new appointment with the morning briefing. Let's get started right away. Let's do, in short, a recap of what happened yesterday. In short, the day was absolutely, in short, significant from all points of view. In short, there were various macroeconomic data and expected speeches about tariffs that set things in motion. But these enormous movements, in short, after the closure, as we were saying, the situation in limbo was in the area where these movements could occur, Gerard, especially considering the outcomes of this speech by Trump, which took place last night. In short, with the announcement of these, in short, the definitive announcement of these tariffs, an announcement that somewhat surprised the markets negatively in the sense that there was knowledge of the tariffs, but it was expected. An impact, in short, that would have an average around 10 to 15%. A weighted average towards everything was supposed to be this. The market was expecting this. Data in hand, in short, with the tables shown yesterday by Trump at the press conference. Unfortunately, this weighted average has risen, and not by a little. In short, we are around 25% as rates. So, in short, a very negative impact that obviously reflects on the stock markets, on fears of economic growth that will surely be affected by these rates, also because the countries towards which these rates have been imposed will react in turn, so much so that the European Union already announced last night that adequate measures will be taken to, so let's say, fight or try to put a stop to these tariffs imposed by Trump. So, a very peculiar situation, a bit tangled. And you see, for example, the market, it had started off quite well with a good recovery, probably as a result of the strong ADP data released in the early afternoon. So this suggested good for everything that was being imposed. Then this final cold shower after the close, brought prices below the lows we have repeatedly indicated, those of March 13. Recorded so with great ease, these lows were broken with great aggressiveness. Yesterday the Nasdaq went from 20,000 to 19,000 in the span of 10-15 minutes. So very, very significant movement. Today, there are other important data. There are the unemployment benefit claims that will certainly provide another piece to have a more complete picture for the unemployment component. Unemployment, which we'll conclude tomorrow with the highlight of the week with the non-farm payrolls. Today, there is also the index of non-manufacturing ISM, very important for the United States because it represents 85% of the US GDP, so absolutely important. We will also need to check the inflation component of this because now the focus is shifting to these two elements. So there will be this slowdown in global economic growth and the potential consequences. Obviously, a greater inflationary push and obviously lower economic growth. So it's a situation to monitor closely. Many large investment firms have also raised their forecast regarding approximately the risk of a recession. Nomura, JP Morgan, Goldman Sachs have raised their forecast to between 40% and 48% chance of seeing the economy iOS 6 in recession next year. All of this might already be priced in by the market at this moment. In short, it's a big question mark. Right now, we are exactly at those lows that we have pointed out several times. So becoming a seller at these lows seems a bit aggressive to me. I would definitely wait for a bit of a rebound, which has already happened this morning. And after the initial opening, the market is trying to rebound. It's finding a base. It's trying to rebound to seek reinforcement. an initial attempt at recovery. But certainly these are not prices in short on which I would decide to build a short position. In short, I expect first a bit of a rebound. Could also be for many a buy the dip. But even here, the risks are many multiple. The variables are really numerous. It's a trade war that is essentially just beginning. So let's wait before making predictions. Let's wait for hard data, especially as the major investment firms suggest to have a picture, a more complete picture of the situation, and to be able to decide accordingly. Okay, having made this preamble, always remember utmost caution, work with stop orders in place. Do not increase the size, do not be tempted by volatility, do not chase prices, especially since the spread between bid and ask is very wide. So increase the stop and decrease the size if you wish. Working in these markets, which I repeat, are very, very volatile. In short, it really goes truly. In short, from +2 to -3 within the day. So this gives you an idea of the swings and the volatility present in the market, in addition to the volumes. In short, which I forgot to mention, have returned to being enormous. So utmost attention. Perfect. Let's move on to the details. For now, we start with the Nasdaq. We are working below the gap left yesterday. This is the entire decline we witnessed yesterday during Trump's speech with the announcement of these tariffs. At the moment, we are working below HV. I had to review the calculations a bit this morning because obviously everything is messed up. In short, redo some calculations. I hope I haven't made any mistakes, and well, at the moment we are working within this range. In short, between the BC3 levels, well, that's what formed last night. That's this green one, and that's what formed this morning. So we wait. It's 9:30, so we are witnessing a bit of a recovery, we'll see. In short, it could easily be a dead cat bounce, but probably, well, there will be anticipation with a tendency, in my opinion, towards an upward movement in the sense of recovering a bit of this huge drop that happened last night. After that, well, then there will be the data, and well, from there the dance will begin and we'll see a downward trend. Obviously, on the Nasdaq, we are going to monitor these, well, the lows of August 5th, the lows recorded on August 5th, well, those following the announcement of the Japanese central bank. Well, those are the lows to monitor. Absolutely, because, well, the outlook is that truly, well, it is disturbing. Frankly, I expect a bit more of a decline because the market needs to digest. Well, it must, let's say, just calm down all this commotion that has arisen, that arose yesterday. In short, as a consequence of this, so pay maximum attention to the downside. We were saying, if we look at it on a time frame, let's put it on a broader 4-hour frame. 7 lows of August 5th. Should be September 6th, August 5th. Here they are. This would be the target of this second wave. What do we need to know? So this is not a possible target for NASA should the descent continue. In short, for you, we will see in how much time it is certainly a possible objective. Certainly this blue level that I have marked here, so 18,660. And I think that more or less today's bounce area is another level to monitor. In short, it's a very important level where there might be an attempt at a new rebound. We'll see, guys. Pay close attention because do you see? The volatility is very high. When they start selling, they sweep away at any level because the volumes are high, the fear is great, and so this triggers these steep movements. And so, Violet, so pay maximum attention. I emphasize it once again. Let's look at them. In short, here too, a similar situation where we are already below this red level that you see, the one we had pointed out several times. We are working right below it. As you can see, this hasn't moved even here if we look at it on a 4-hour chart. Here it is. This is the level of the Tinkiavostor that should be the target of a third bearish wave, considering this as the first and a second. The recovery, in short, should repair if this third bearish wave starts. This should be the first target, in my opinion. For them, instead, if we look at it from a perspective, let's say, more operationally focused on the day. In short, obviously, it seems clear to me the level to recover in order to attempt a higher recovery, perhaps here for RD2, which then represents the area of all these minima. So this is the first obstacle. This is the second for being bearish, obviously the lows recorded last night, which then coincide with the 1D minimum expectation of a low. In short, these lower nights, these open up here as well, rather alarming scenarios. We'll see. In short, we are here to monitor the situation. Let's look at the others. Russians and Americans, starting with the Dow Jones situation, obviously. In short, well, we are working even lower compared to SN. So, in short, it's hitting the head, especially due to this Stasi policy, which should definitely harm a little primarily American companies. But I believe that then overall, it's a little bit as in the expectations of the announcements from the Trump administration that have passed a little. This initial storm after, this could only bring benefits to the American economy. I obviously agree with the American administration. We will see if both of us are right. From an operational point of view, 42,000, the quota to recover, the gap, obviously. Here's already an area that one might consider clearing with the same as it is. This area, here could be a new area of attack by the sellers for NASA. Certainly, here you want to stay at BC3 RD2, so 19 and 4. Roughly speaking, it could certainly be reattacked in short violently by the sellers. We'll see in short how we get there, and if we get there, especially because they could also start from here. In short, continue the decline directly. We were looking at the other futures. Let's also look at the NASDAQ in short quickly, but it doesn't change much compared to the others. In short, the situation here is also concerning, in short, really violent. The movement. On RASE, we are working under the 2000 tail, so it was an important thing to recover. It roughly corresponds with the nice BC3 on Wednesday at the opening. So pay maximum attention to this level, as it is the one to recover even more at this time, which is essentially an adjective. Downward. Here too, in short, the area 19. In short, there's the round number. It should, in short, manage to hold. But obviously, as you cut, if they were to say here too, the downward wave is a reference for me. As a target, the lows remain, in fact, recorded on August 5th. Okay, let's also take a look at the DAX. What are they? Which, in short, obviously, in short, there's for the overnight movement, opened in a strong way that from one, like all indices and like all European markets. Obviously, in short, at the moment, it will be working. In short, within a range between SD2, HV, thus with a decidedly downward trend, the volumes at this moment have entered well upwards shortly after the opening, but they had been good. In short, starting from 8, therefore from the opening of the cash market. And so we are witnessing, probably, they are also waiting for some announcement from, in short, from the European Union regarding the issue of tariffs. So we will see, even here, there is anticipation for everything that is developing. It still needs to be understood what happened and what the real impacts on the economy will be and consequently on the markets. Yesterday, for example, as a result of this thing, all oil was violently torn. It dropped from 72 to 69.20, from 72.20 to 69.20. So a huge increase also in oil due to the risk of a recession, hence an economic slowdown, which would obviously lead to a reduced consumption of oil. We see it here. What happened? Regarding gold, it continues. In short, obviously, and I plan to attack. In short, it skyrocketed yesterday. In short, it made a leap beyond. The lay recording a new high. At the moment, in short, it is slightly off due to the recovery that started this morning in the European markets, so it's cooling off a bit. It remains strong nonetheless. There are then some truly enormous variables and components. And in short, that was where many institutional investors and central banks are also active. Therefore, it is really difficult to make long-term forecasts, even though it seems many analysts set a target of 3.5, 3.8, so we will see what could actually be the targets for this asset. I wanted to take a look at silver, which was requested of me yesterday in the chat. At the moment, well, yesterday it had a slight upward movement, but you see, as a consequence of the market crash, with this announcement of rates, there was a strong correction in silver. At the moment, we are already working on the levels. VIX, so a movement that continued after having sort of stabilization base. At the moment, we are working on the day's minimum expectations. Let's take a look maybe on a 4-hour chart to have a broader view. We find the KSP lines, which of course appear in abundance. Here it is. Let's say it essentially recorded more or less a double top. Well, now we are in a phase, let's say, where it will be lateralized. It made an attempt to recover the rejected highs, but essentially if we remain in this channel that seems to be directional, well, quite supportive even with these, and strong, well, of descent, so probably to redistribute, because people are still one of those metals that is very much needed for the technology industry. Well, a little bit like them, even though they are more also, well, used as a reserve, as a safe haven asset. So maximum attention to the volumes, you know, they are quite high. Also on silver, they have been quite high. Pay attention to silver as well. Well, as I was asked, I repeat, at the moment, well, the channels know. Well, it's nice, precise. Well, it is drawn. It is continuing to descend. They will probably hit the lows. Well, of Ringi, lows, could then bounce back. We'll see. Well, it's not one of those instruments I follow a lot. But I went out in the furniture to give some more input. To those who asked me in the chat, having done this exit, you see this range at the moment. It has leaned right on the apex, well, on this ring. Here we can identify and then even lower. So this could be the base from which to start rising again. We'll see. We'll see if it happens perfectly. With this, we have reached the end of this morning briefing. As always, I invite you to leave a like on the video and follow me on social media as we will chat later. Thank you all for your attention.